Good morning, everybody. We have a mixed trade in the grain markets here early on Tuesday morning. It is 6:30 a.m. Central Time. December corn futures down 1 at 538.5. November soybeans down 4 3/4 at 1282 3/4. December Chicago wheat up 2 3/4 at 725. December Kansas City wheat up 2.5 cents at 723 1/4. December spring wheat is up 1 at 922.5. If you guys are listening on the podcast, appreciate it. Leave me a rating or a review. If you are watching on YouTube, hit that subscribe button. My goal is to get to 5,000 subscribers. We're very close to getting to 3,000 here short term, which is I'm happy about that, but longer term, I want to get to 5,000. So help me out. Hit that subscribe button, like these videos. If you need some additional assistance from me, guys, go to my website. It is www.standardgrain.com. Go to that website, click on Grain Marketing Plan here in the upper right-hand corner. For $49 a month, I've got a subscription service that you can buy. It includes my morning email, which goes out every business day at 6:30 a.m. Central Time. My text message service, my subscriber-only videos and content are included. In those videos, I break down all sorts of topics in regard to grain markets, grain marketing. I get very specific, a lot more specific than I can do here on the podcast or on the YouTube channel. This is a monthly subscription. This is an informational service. You can cancel it at absolutely any time. There's no other fee, no other obligation. And as I've said before, I will not try to sell you anything else. And I know that that's a big sticking point for a lot of people. So certainly check that out. Get into the headlines here this morning. China bought some soybeans yesterday. This was the biggest flash sale of soybeans to China or any destination since June 21st, 334,000 metric tons. That's 12.2 million bushels for the current marketing year. Some traders believe that China just simply does not have enough beans bought from the United States and that they may need to accelerate purchases here. Chinese purchases of U.S. soybeans are down, I think, 37% versus last year's pace. So they have a little bit of work to do. And granted, Brazil had a very big crop. They were still competitive up until recently. So this is an issue that we need to watch. But that is certainly a step in the right direction. You know, most of these sales we had seen up until yesterday were south of 200,000, and now we're 334. So we need to see more sales of that type of size. U.S. corn and soybean shipments improved slightly. Corn inspected for export improved to about 518,000 metric tons. Despite that improvement, last week's corn inspections were down 37% versus the same week last year. And this all goes back to the hurricane and issues at the Gulf and the backlog, all of that stuff. Soybeans inspected for export were 6-month high, 441,000. That is still down 66% versus the same week last year. So, yeah, I mean, it's good relative to the last 6 months, but seasonally, these shipments or inspections are not where they need to be. And again, this all goes back to issues at the Gulf. We had our crop progress report out from USDA yesterday. The U.S. corn crop is 18% harvested versus 10% last week and 15% on average, so just slightly above average here. The crop was rated 59% good to excellent, unchanged on the week, below the 65% average. When you go state by state here, Iowa is 9% harvested as of Sunday, Illinois 21% harvested, Indiana 15%, Ohio 6%, Minnesota corn 10% harvested as of Sunday, Nebraska 13%, South Dakota corn 10% harvested as of Sunday, North Dakota 9%, Kansas 36%. So we are moving along slightly ahead of average here. Soybean crop, 16% harvested versus 6 last week and 13 on average. That crop rated 58% good to excellent, unchanged on the week. That's below the 64% average. USDA says that 75% of the bean crop nationally is dropping leaves versus 58 last week, 66 on average. So just slightly above average in terms of soybean harvest as well. The U.S. winter wheat crop is 34% planted versus 21 last week and 32 on average, so above average there as well. Your HRW states are moving along. Texas, Oklahoma, Kansas are all 27 to 37% complete in that ballpark. Colorado, Nebraska, South Dakota further along, more than half done in those states. SRW areas in the Midwest just getting started. Illinois is 2% done. Indiana 11% done. Chinese government projects that stocks of feed grains will remain high. There was some sort of live stream discussion, and the China National Grain and Oil Information Center made a few statements here. They said that stocks of feed wheat and rice were plentiful and that grain imports would remain at high levels. They projected corn imports at 20 million metric tons. That would be down from 29 million. USDA is projecting that number at 26 million. This corn import projection from USDA, I believe, is an area of of contention. We know that they made a lot of big purchases back this past spring. April and May, China bought a whole bunch of new crop U.S. corn, but they haven't really done much since. And we're starting to get the idea here that maybe these imports of corn into China will not be as big as they were last year. I think a lot of people are leaning that way. They're going to have a bumper corn crop in China. That is one thing that was mentioned as well. They also said that China is projected to consume 36 million metric tons of feed wheat, which is equal to the USDA estimate. Fed Chair Jerome Powell will give a speech today in front of the Senate Banking Committee, and they released the speech essentially prior to it. Powell addressed inflation. He said that economic growth has continued to strengthen. This is his quote: "Inflation is elevated and will likely remain so in coming months before moderating. As the economy continues to reopen and spending rebounds, we are seeing upward pressure on prices, particularly due to supply bottlenecks in some sectors. These effects have been larger and longer lasting than expected, but they will abate. And as they do, inflation is expected to drop back to our longer run 2% goal." That's kind of been their narrative here as of late. They've gone with the idea in their speeches and in their statements that, yeah, inflation's going to last a little bit longer than expected, but they still think long term, and they don't really define what long term is, that we'll be back to 2%. I think this statement scared a few people yesterday because if inflation begins to really run rampant and becomes extended, I mean, the Fed may have to raise rates. Maybe that's why the stock market backed off a little bit yesterday. Cattle market finished lower yesterday. We were down less than $1 in the fat cattle. Some more steep declines in the feeder cattle market. Some of those contracts off $2.50 to $3. That cattle on feed report was neutral to maybe slightly negative. In the outside markets this morning, the U.S. dollar is higher. We've got the stock market off. The S&P's down 38. The Dow is down about 150. Bonds off more than a full handle. We've got the crude oil up 80 cents at 76.25. This WTI crude oil is within an earshot of some 3-year highs, and if you get above those 2018 highs, it'll look awfully good from a technical standpoint. Everybody have a wonderful day today. I will talk to you guys same time tomorrow.